We await the beginning of trading for DoorDash, that $3.4 billion IPO. That's how much it raised. 102 is where it priced. We're waiting for it to start trading. Our Emily McCormick has been watching it as well, and she's got the details for us. Emily.
Hi, Julie. We are awaiting that opening trade here for DoorDash. That price discovery process is underway and just waiting to get some indications from the New York Stock Exchange about where those shares might actually open. But taking a look at where this IPO actually landed, we had DoorDash's IPO yesterday even bigger than expected. The food delivery company sold 33 million shares at $102 a piece. That exceeded the range of between $90 and $95 per share that DoorDash had used to market those shares. And that in turn had been raised last week from between $75 and $85 a piece. So really a testament here to the rising demand, even in the past couple of days that we've seen for this stock. Now, this meant that the company raised nearly $3.4 billion in its IPO. That was the third largest we've seen here in the US so far for the year to date. It was topped only by the $4 billion IPO of Bill Ackman's SPAC, Pershing Square Tontine Holdings, as well as software company Snowflake's IPO after its over allotment options. Now, DoorDash's pricing implies a valuation of about $38 billion on a fully diluted basis. For now, again, looking like there was quite a bit of demand for shares in that IPO. Now, as we wait that opening trade, worth looking a bit here at DoorDash's recent operating results. The company really has been a beneficiary of this year's stay-in-place orders and social distancing as customers increasingly turn to digital food delivery services. We saw revenue in the first 9 months of this year more than tripled over last year to $1.9 billion. And over the same time frame, its net losses narrowed to $149 million, down significantly from more than $500 million in 2019. And also worth noting here that DoorDash was briefly profitable in its second quarter this year. That's when the height of stay-in-place orders actually took effect. So again, still unprofitable when we look at the overall first 9 months of the year, but a brief moment here where the company was pacing towards profitability. Julie?
Yeah, really interesting revenue chart we were just looking at there. Thank you so much, Emily. Now, with the anticipation for this DoorDash IPO, there's also come a backlash that began even before the IPO, right? Brian Saza, we've been talking about this. There was an opinion piece in the New York Times this morning that pointed a finger not just at DoorDash, but at other food delivery services at really being sort of predatory when it comes to the beleaguered restaurant industry. For many of these restaurants, many of them not part of chains, of course, they're mom and pop places, small businesses that are now getting more and more of their business through delivery and pickup. The margins are really squeezed even more than ever by these types of services. And there was one quote that was highlighted by that op-ed that I just want to bring up, Brian. And it cited the former head of innovation at Grubhub, a guy named Colin Wallace, who, in response to a blog post, had written this: "They give you the sensation of cash flow, but at the expense of your long-term future and financial stability." In other words, you get that traffic, you get that short-term juice, but then over the long term, you're really then sort of trapped within that system of paying high fees to these companies. So I do wonder, Brian, what that's going to do to the long-term sentiment around these businesses.
No, and you have to wonder, is DoorDash a friend or foe of the restaurant industry? Are they the giant vampire squids sucking the life out of the restaurant industry? And a lot of the small restaurants out there, they can't necessarily afford to work with a company like this. They need every penny that they earn, especially during a pandemic. But Julie, I do want to continue to throw cold water on this here. This is a company that has lost $150 million through the first 9 months of the year during a pandemic that likes of which we have never lived before, and we're supposed to be all using their service. To me, that is a business model that's just may not cut it as a public company, at least in the first 2 to 4 quarters. I also want to mention, too, as an investor, you're going to probably get swept up into this excitement and this euphoria on IPO day. It always happens. I've seen this movie before. But let's compare the company to Snowflake. Snowflake, we just had the CEO on, Frank Slootman, here. They are creating the next generation in cloud computing. They have created something that can't necessarily be replicated, and if it can be replicated, it's definitely not going to be over the next few years. They are changing the game in cloud computing. Julie, I don't know if DoorDash is fundamentally altering anything in the market that it competes. There are other competitors to this company.
There are indeed. And also we should note that DoorDash, like many of its competitors, has been giving sort of discounts to the restaurants that are in distress right now. So once the pandemic ends, they're not giving those discounts anymore. What happens then to profitability? That is one of the lingering questions for it.